Welcome to Kitco News. I'm Niels Christensen. We're here day 2 at Silver Gold Summit in San Francisco. Joining me now is Kai Hoffmann, CEO of Soar Financial Group. Welcome.
Niels, appreciate it. Good to see you again.
It's a long way from the Val-d'Or airport where we did our last video interview.
It is, and we dressed up for this one as well.
Yeah, gotta look nice. Your presentation today, gold versus reality, I think very appropriate. How do you explain gold up 20% this summer, no love for junior explorers?
It's a tough one to explain. So gold price versus reality, it is really tough to explain because there's so many factors weighing in here. Like, why is there no attention coming back to the sector? I think we're seeing some attention going towards the developers and the bigger producers. And I mentioned earlier, like, your investment is pretty much killing our industry by putting money into ETFs, and it's not helping us. Like at the Ornig Index, we track overall financing activity in the junior space, so we don't track financings over $100 million. But it shows an increase. And I think I mentioned in Val-d'Or at the airport where we did our last interview, that us, like, let's say professionals in this space have gone bullish. Like, we're super excited about what's happening. Gold's gone up from $1,200 to $1,500, so $300 up, like 25% increase. That's fantastic. But the overall market hasn't really seen it yet. Like, but if you look at the TSX reports, the Q2 report for the TSX or TSX Venture as well, 8 out of the 10 companies that have risen the most are mining companies. But people don't realize that just yet. So money is still flowing to a degree into cannabis, like less so, fortunately. Yeah. But the blue chip companies are still like marking new highs. Like, there's no need for the generalist investor to move their capital to a higher risk space.
How does the mining sector compete against record equities?
We can't just yet, because we're simply a higher risk market, especially the sector we're working in is the junior mining space. It is venture capital to a degree. But at one point, and I think it's going to be sooner rather than later, the market will turn and you'll have to look for your returns elsewhere. Are
you optimistic in the fact that we are seeing the producers having fantastic numbers? You look at the big Agnico Eagle, Yamana. I talked to Keith Neumeyer with near record production at First Majestic. There is good news in the sector. Does that trickle down? Do we just have to be patient for the resource?
That's the first step, and I think it shows investors, okay, there's money to be made here. I hear companies are increasing their dividends, so that's great to attract the generalists, but it will take some time to trickle down. Fortunately, Agnico Eagle is one of the busier companies. They invest also downstream. They look at exploration projects. They do have holdings in smaller companies to advance projects, so that's beneficial for us, and if they have more cash flow or cash to deploy in those areas, that's good for us.
Okay, so one of the things I've heard, it's not necessarily about the price, it's about excitement. A higher gold price hasn't really created this excitement in the junior resource sector. And I'm sort of wondering, what are your thoughts? Do we need to see a major discovery to really get that excitement? I mean, is it more about activity than it is price?
It needs a trigger. I don't think 1,500 is really helpful for the juniors or the junior explorers, and even the mid-tier companies, because we're still waiting for the fallout from the Barrick and Randgold merger, Barrick and Newmont joint venture in Nevada. Like, we're still waiting for that to happen. And I think I said that in an interview with Michael, your colleague Michael, in March. We'll have to wait till September, October. And now it's October, nothing's happened. Fortunately, or unfortunately, the gold price is now at 1,500 gold, where the companies can reevaluate their operations.
Everything looks good at 1,500.
Exactly. Like, all of a sudden they're making money. There's no rush or no need to sell. I think Red Lake is the only asset that'll probably be coming out of the Goldcorp Newmont merger, right? And I know some of the other companies, or I'm sure some of the other companies, like in SSR Mining, they're all waiting for stuff to happen. They have cash, but it's missing that trigger. It's like. And I think M&A could be that one trigger that gets the general investor excited as well, but it hasn't happened just yet.
So last time we talked in Val-d'Or, you said you had FOMO in the mining industry, fear of missing out. Yeah. Obviously, we haven't missed out yet. So how does a generalist play this market? I mean, what's the advice for generalists who are looking at the mining industry?
It's fairly simple. Like FOMO, and maybe I got to put them more in context. In the junior space, like it's always great to play private placements and be part of it, and then deploy capital. Right? Capital is limited, so you do have FOMO because you can't participate in every deal that's going up. And back in, I think we talked in early August, a lot of deals where there was a lot of activity, like the Ornig index, it rose tremendously, a lot of financing activity, and you couldn't participate in every placement that you wanted to participate in. For investors to participate in a run-up that's hopefully bound to happen, maybe even in January, like in the next couple of months after maybe tax loss has taken some of that off, start at the top. Like it depends on the risk profile. It's tough to mention. Is like, of course, the highest rewards are in the junior stocks, but I think even a mid-tier producer, a development company, could reward you quite handsomely.
Last question. Sort of debate that I've been having with some mining companies, giving value back to shareholders. What is that? What do you think that looks like? Is it better to give dividends, or is it better for growth? Like, to put money back into your project.
I want money to be redeployed.
Yeah.
Like exploration, keep the pipeline full.
Yeah.
Like, yes, if you're printing money at 1,500 gold, maybe there's an option, but make sure to keep your exploration pipeline full. Otherwise, you'll be struggling in 5-10 years down the road. So I'd rather see growth, and same with the tech companies. And we're San Francisco, the heart of just barely north of the Silicon Valley, right? You don't see a lot of dividends coming out of all those unicorns, right? So I'd rather see money reinvested, and I think share price appreciation is more valuable than dividends at this point.
Excellent, fantastic comments. Thank you very much for your time.
Appreciate it. Thanks for having me on again.
Thank you for joining us at the summit.
Great.
Thank you for joining us at Kitco News. Stay tuned for more coverage from the Silver Gold Summit.